Ho, ho, ho! Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life, and the lighting's a little dark in here, so you might see a breaking of the veil around me. Apologies, it'll be okay. That's what happens when you're bouncing around everywhere. Hope everybody's having a Merry Christmas or Happy Hanukkah or whatever you celebrate. Doesn't really matter. Hope you're having good holidays and you got a couple days off to spend with family and plan out your next cryptocurrency mining purchases. Hey, there you go. So today we're going to be talking about up only, of course, and this idea that are we in the phase of up only or not with Bitcoin, because we've started to see it go up. We're getting close to the halving. However, you know, historically, we see Bitcoin really not start to go up only until after the halving, and the halving hasn't happened yet. It will be coming in around April of 24. We're also going to be talking about the government coming down on crypto with Warren's statement that basically you're a criminal if you're into crypto, which is bollocks. We'll go ahead and borrow that term in my humble opinion. But we're also going to be talking about trends coming into 2024 and what you should be looking at, because we are seeing a complete shift, of course, in the mining landscape and what's important to individuals and what is not. And we're going to talk about some of these trends specifically as it pertains to this new crypto that is extremely obviously profitable on hashrate.no called AI Power Grid. And we're going to go over their white paper, and what you're going to find, I think, and what I have found is that all of these cryptos are starting to lean towards saying the same old bull over and over again, trying to get people to invest into them. So, hey, that's bullish though from our perspective, because that is what begins to happen once we get close to getting into these markets going up only, right? You just start having the same thing, whether that be, you know, NFTs or DeFi or whatever these terms are. AI is obviously going to be a big one. This is when we can start seeing, you know, are we moving into a new cycle, and what are going to be the big players in this new cycle and how to spot them. Let's go ahead and get into it right after a word from today's sponsor. Today's sponsor is BT Miners. BT Miners has been a longtime sponsor of the channel and a proven reliable source for ASIC miners. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners has recently launched an app on iOS and Android that lets you browse their inventory by profitability and return on investment. Follow the affiliate link in the description and use promo code SOAT for a discount. All right, welcome back. So let's start off with an opinion piece from CoinDesk. Is it really up only for Bitcoin? And obviously this is the question that everybody has. If you've gone over my crypto mining e-course at sonofatech.com, you might be looking at this cycle and going, hold on, wait a second. Things are not playing out exactly like they used to. And that may be true, but remember, history doesn't necessarily repeat, it just kind of mirrors. And let's go ahead and look at this particular article and see what they think. So, it's that time again when your friends and family members, they're setting the narrative up, right? You're into Bitcoin, you go to your Christmas parties, everybody's like, oh, how's Bitcoin doing? Last year didn't feel too good, now did it? You went there and they're like, oh, you're not doing too good with that Bitcoin, are you? This year, you know, maybe it's starting to change. We're starting to see normal people get interested again. As, you know, we're completely expecting it. I mean, if you've been doing this for a couple cycles, you're fully aware of the fact that you're going to have a bad down year and then 3 up only years, more than likely, right? And it's just a constant up and down. And that is the same with everything in life. It's just a little bit more accelerated with cryptocurrency, which is kind of funny. So it goes, the truth is, if you're thinking about buying Bitcoin right now, the opinion says it might not be the best time to make a sizable purchase, despite the fact that we might see spot Bitcoin ETFs approved in the near future. And it goes on to say why. Let's start by looking at Bitcoin's price action during periods leading up to the last 2 Bitcoin halvings. This next is due in late April, when block 840,000 is expected to be mined. Bitcoin halving cycles last for about 4 years, 210,000 blocks, and produced at approximately 10 minutes per block. At the commencement of each cycle, the block subsidy reward that Bitcoin miners receive is cut in half, which triggers a Bitcoin supply shock. Historically, Bitcoin's price has risen dramatically during the year and a half that follows the halving. The price then tanks and trades in a range for the cycle's other 2.5 years. From late 2013 until mid-2016, when the second halving occurred, Bitcoin's price fell from $1,166 to $156. It then rebounded to $780, 67% of its previous all-time high, before falling 40% to $472 in August of 2016. The 472 price point marked a local bottom just 1 month after the second halving took place. From late 2017 to 2018, Bitcoin's price fell from $19,666 to $3,150 before rebounding to $13,882, 70% of the previous all-time high. By March 2020, its price had fallen 72% to $3,867. $3,867 marked a local bottom for 2 months before the third Bitcoin halving, which occurred in May of 2020. Another 2.5-year period that precedes a Bitcoin halving is coming to an end. This period began in late 2021 and will end in April of 2024, when the fourth halving is scheduled to occur. During this period, thus far, Bitcoin's price has fallen from $69,000 to $15,522 before rebounding to $44,759, 65% of the previous all-time high. This 65% rebound, the current one, is awfully close to the 67 and 70% rebound we saw in the 2 previous cycles. And so the big question now is, will Bitcoin's price retrace significantly leading up to the next halving as it has leading up to the other 2 previous halvings? If Bitcoin's price were to fall 40% from these current levels, as it did in 2015 and 2016, we'd see Bitcoin's price at $26,855. As of writing, it's approaching $44,000. If it were to fall for 72%, as in 2019 to 2020, we'd see Bitcoin's price at $12,532. I've seen very few people mention such numbers in the wake of euphoria Bitcoin investors are currently experiencing. So, will this time be different? Aren't we waiting for billions of dollars to flow into Bitcoin almost immediately after the spot Bitcoin ETF is approved? Maybe. So, if we look at it from that perspective, right, and we take into account the cycles, how they affect it, and a repeated pattern within Bitcoin, then you could say it's fully expected for Bitcoin to retrace back down under the $30,000 mark before we hit the halving in April of 2024. And once that halving hits, if we continue the same cycle as always, we will see an up only for about 1.5 years going on after that, with a really big euphoria phase, about 6 months after the halving, which would happen sometime in October of 2024, with peaking starting, going into the new year of 2025, which I've talked about to exhaustion on this channel. But we do have this pending situation with Bitcoin spot ETFs, and more people that have been around for enough cycles to understand this. And this is where we start to get the question of, will people actually be selling off Bitcoin like they have in these previous periods right before the halving? Or will they be expecting this and keep the price levels higher because they won't be selling off from the fear that happens because of the price going down? And I think that a lot more people are educated that are participating within cryptocurrency, that it may affect the way this cycle plays out. Not to mention another thing that is a huge factor when we start talking about the halving cycle with Bitcoin is the amount of fees compared to the block reward. And as most have postured in the past, once we get to the point of fees, meaning the block reward, what we will end up seeing is a settling of the volatility of the market, and the Bitcoin price will then be a lot more stable across the entire space because you have fees matching that. Why is this important now? Well, we kind of have a perfect storm of not only Bitcoin ETFs and the halving coming, but we also have ordinals, which have greatly impacted the amount of fees that miners are getting paid out in block rewards. And because the fees are being increased, the miners are not as dependent on the block reward as they were in the past. However, it is important to note that we aren't quite there of parity between fees and, of course, the block reward as a whole. So I still think we have 2 to 3 more cycles before we really see the Bitcoin price start to settle out and we break out into the macro and out of the traditional halving cycles. That's personally what I think. However, you never know with euphoria and ordinals, especially like we saw with NFTs on the Ethereum side of thing in the previous cycle, how much that will actually impact price. But if we're talking about moving into 2024 from the perspective of what will be the trends, what's going to impact price, and what should I be looking out for, well, you should be looking out for the popularity of ordinals and how much that brings up, of course, the fees in comparison to the block reward. You need to be paying attention to the Bitcoin ETFs, and you need to be paying attention to miners selling off before the halving so that they can, of course, pick up some more miners to then have more hash power so that they can make up for the halving loss there. So that is all the things that you should be paying attention to moving into 2024. Of course, I'd like to hear your thoughts about all this in the comment section and the live chat. Speaking of, for the live chat, of course, at the end of the show, we'll get into questions and answers where super chats are never required, but always appreciated and the first to be answered. And if you tag at Son of a Tech, it will highlight the message orange and I'll be able to read it and respond to this and we can come back to it. Now, this article in particular goes over, of course, the Bitcoin ETFs, but we've covered that to exhaustion. What I really wanted to highlight here is what we have seen traditionally in the past and set your expectations so that you are aware that this halving cycle is not fully complete yet, right? We still have another pullback that is possible from previous cycles. So let me know. Do you think that we're going to have another pullback running into the halving in April, or do you think we're up only from this point forward? That being said, we have a lot of positives coming down the pipeline for cryptocurrency in general, including Bitcoin ETFs, the rising of fees thanks to ordinals, and general AI that is starting to get implemented that we'll be talking about here in a little bit. But not all is well, because if you are into crypto, you are a criminal, according to Senator Liz Warren. So here we go. Obviously, she's been attacking crypto for the longest time. I love following Shibatashi Nakamoto over on Twitter, who just gives her a hard time all the time. But let's get into this. So if you work in crypto, you are going to hell. I stand with Elizabeth Warren as part of her anti-crypto army in condemning this villainous industry chock full of crooks, bastards, and fools waiting to be separated from their money. The grift and crime rampant throughout crypto is comical and villainous. It is comically villainous. They will vilify what threatens them. You know what's really villainous? Manipulating markets through the government for personal gain. Just saying. Together with the likes of newsletter writer Matt Stoller, we of the AntiCrypto Army are banding together to strengthen regulatory attention on crypto. No way should there be a means for consenting peers to transact directly without a bank or financial institution to act as an intermediary. Now, that is the exact purpose, and that is what pushes towards freedom. I've actually been having this discussion a lot lately in the terms of government in general, which has been really interesting with a few individuals. Like, for example, if we get into freedom of religion, a lot of Christians or, basically that will tout freedom of religion will still think that religious practices should be governed by some sort of government body, when in fact, if you start to move down that line, you end up having a problem where you lose your freedom to practice religion. If we move that over into cryptocurrency in general, once you basically have the government in control of the money, then you lose your freedom to transact with individuals directly, and obviously you lose that freedom. So it's sort of similar. Like, the more we push into regulation, this is a point of contention I've had with a lot of people in the cryptocurrency space for a very long time, because whenever I have the discussion with individuals about cryptocurrency, it comes to the point of them saying, well, it needs more regulation. No, it does not need more regulation. It needs more personal responsibility. The fact is that individuals like Matt here don't want to accept personal responsibility for their own mistakes, and so they put that burden on the government so that they don't have to absolve for their sins. It's the way it goes, and this is the same with throughout everything within society. We must keep people and the public safe. Of course, we're going to hear that narrative. If cash were created today, I'd oppose it for the same reasons as crypto. Of course you would. Oh my goodness. Cash and crypto both fall afoul of the Bank Secrecy Act, BSA. The BSA is a much needed and highly effective regulation. Without it, U.S. financial activity would falter. In no way is the BSA simply a means for banks to absolve themselves of the responsibility of proactively preventing fraud or making good when it happens by allowing them to file wanton suspicious activity reports to regulators who definitely have the means of assessing the risk. And in no way does the BSA violate their civil liberties enshrined in the U.S. Constitution. That is simply not a conversation worth having. Yeah, this is the way people argue when they don't want to actually address the valid argument of it being a violation of the Constitution, because they don't actually have a valid argument there. So they just tell you that it's not a point worth having, right? It's not a conversation worth having. Indeed, because no crypto exchange performs standard know your customer checks, and that's not true at all either. A lot of crypto exchanges perform standard know your customer practices and checks. Crypto.com and Coinbase, the two largest in the United States, definitely perform KYC. So that is false in general, but I oppose KYC personally. I think that you should have non-KYC exchanges that you're allowed to participate in. And in an ideal world, we would have fully decentralized exchanges, which obviously with DeFi has been extremely difficult to get to because of liquidity issues, etc. But ideally, we would get to the point to where that would be the go-to solution for all of this. Anyways, it does exist. So, or works with on-chain analytics companies to monitor for illicit activity or terrorist financing. Yes, there is. All of this is in place already. I know this because Senator Warren wrote a letter to Congress saying so. Oh my God, you know it because Elizabeth Warren talked about shit she didn't know about. Oh, cool. Oh, good. Glad you're listening to someone that has no clue what they're talking about. And that's what you're going to utilize as your source in this letter. It's comical as hell. You could just Google KYC crypto exchanges in the US and it would pop up and it would give you all the regulations that surround it. It would give you the examples of it, and you would see previous on-chain analytics that were utilized to solve crimes in conjunction with said exchanges that already exist. Oh my gosh. Oh, never mind that companies like Chain Analytics or Elliptic routinely find that the vast majority of crypto use is legitimate or at least not explicitly illicit. I mean, what else would publicly verifiable and immutable ledgers be used for? Indeed, Senator Warren, and obviously this is like a slapstick on CoinDesk, by the way. It's just funny. Senator Warren also sent out a number of letters to crypto lobbyists, including Coin Center, the Blockchain Association, and crypto exchange Coinbase, which has recently reinvested in its own Washington, D.C. pressure campaign, calling out the revolving door that exists between crypto and the Capitol. Shameful activities. Bank and other financial institutions would never hire former politicians or those with political connections to advance their interests. It would be unseemly, say, as a legislator who actively trades stocks. Warren, mind you, is the senator who got the Consumer Financial Protection Bureau through political gridlock, so she knows a few things about financial safety. I love the way they wrote this. Because of all this and more, I must join the ranks of the AntiCrypto Army and combat the adoption of crypto. Even if you want to grant that crypto has been used to fund dissident political actors and freedom fighters alongside terrorists, the contributions blockchain developers have made to cryptography and self-custody solutions, or the political flowering that can follow when people begin to take ideas of sovereignty and community seriously, crypto cannot be worth it. So, obviously they're going on about this. This is great. Who wrote this one? Daniel Kuhn? Is that right? Good job, dude. That was hilarious. Anyways, so this is like something that's been going around for quite some time. I think it's been pretty clear that there are actors within the government that want to stamp down cryptocurrency. We saw all those attacks go down on banks that were working with people within cryptocurrency markets. And obviously those banks were allowed to fail while others were not. It's all that's really happening is a breakdown of the facade. And when you get like a satirical article that is like this, you know, to a certain extent, then you can really see how the public is starting to see through that facade and see through the veil of the BS that the government is spouting surrounding cryptocurrency in general. All right, so what we're going to talk about next is going to be the trends moving in. This is the big one that I wanted to talk about today. Getting serious though. It's hard to get serious about this though. I'm going to be honest, okay? Whenever I see something like this, I immediately think scam, LOL, this is cheesy as heck. Like internet computer or whatever, ICP. You know what I mean? Like, to a certain extent, it gets a little ridiculous. Like, I almost would take a meme coin more seriously than a coin that's like, we are the AI power grid. I'm just saying, at first glance, that's how I feel about it. But what is important about this particular white paper is that it points out a lot of trends within cryptocurrency mining that you should be aware of. And why are trends within cryptocurrency mining space more like, for what we do, more important than overall trends? Sure, we can talk about ETFs, right? We can talk about ordinals, which is going to be overall trends for Bitcoin. We could talk about NFT trends, use of the blockchain there. That's not, and that sort of thing. We could talk about DeFi and so on. But when it comes to being a cryptocurrency miner, it's important to understand what the other miners are working on and what people that are actually focused on mining in general with their cryptocurrency are looking at. And the thing is what you are seeing is a parroting of the community from new projects. So when we see something like AI Power Grid here, what we see is a team that got together, basically took a bunch of took a bunch of information from individuals within the cryptocurrency mining space and then built basically a white paper that would appeal to them, which then gives us an idea of what the community is looking at pushing forward and moving forward. Now, as an influencer too, I am fully aware that a lot of people will watch my videos, see what I think, and put that into their white papers as well. It doesn't mean that any of these projects have validity whatsoever. Of course, you need to have the devs do the work and actually prove out that they're capable of doing what they say they're going to do. But we analyze this from the perspective today of what is going to be the big trends moving forward. And I think that's important. So, This one in particular is really interesting because it mentions a few things. First of all, it is a Ravencoin fork, which is interesting because obviously Ravencoin being a fork of Bitcoin and then trying to be that true ASIC resistant, 100% mineable, no VC backing, all that sort of stuff. And then moving in from there, we've seen recently a shift away from ASIC resistance and a shift into forking essentially Caspa over and over again. And this is kind of coming back to forking Ravencoin, which has been extremely popular to be forked for quite some time, especially within the GPU mining space, right? So one of the trends here in general is going to be ASIC resistance for GPU miners moving forward and for that in general. But really, when this question comes up of like the importance of ASIC resistance, there is an argument here that I think is very key. So if you're going to be on like Twitter and you have a discussion with someone that is gung-ho on some ASIC coin, whether it be Kadena or Caspa or whatever it may be, one of the things to point out is that in general, ASICs are a single purpose unit, which means that they are programmed to do one thing. In the case of Bitcoin, mine Bitcoin. In the case of Caspa, mine Caspa. Now, on a surface level, you could say, okay, that's going to be better for the network because the network, once you have sold all of those units, will have a steady security and it won't go up and down based on market performance, which is basically just saying we don't care if we screw over the amount of money miners are making. Straight up, right? Because they just expect you to leave the machine on even if you're losing money, which doesn't make any sense. I never understood that argument from the very get-go. But you also are basically powerless when having any discussion with someone outside of the proof of work space about the importance of proof of work and the impact on the environment. ASICs are purpose-built to do one thing, which means at the end of the day, when they become less efficient, they become e-waste, right? So it's wasteful. It doesn't have the capability of doing anything else, right, other than mine that particular cryptocurrency, and therefore is a poor argument against any other environmentally concerned individuals that tout proof of stake. So one of the ways that you can get around this is by finding a way to utilize mining hardware to perform other types of work that are needed within other industries, whether that be AI or whatever, right? Node uses or whatever it may be, hosting in the case of like some Flux node type stuff. That is the move that you can move into. And that would be targeted towards basically devices that have more versatility within the compute platform to perform other services other than just mine the cryptocurrency itself. And this is something that we've seen a rise of, obviously starting way back with Flux. And this announcement, I think obviously it would be amiss to not mention really Flux putting this idea forward, which is really interesting, and then that flow into other projects. Obviously, we've seen Dynex, which has found some success there, and we're starting to see this talk of proof of useful work in a lot of white papers. So trend-wise, we will see that. Obviously, what does that entail at the end of the day, though, too? Because they will say that they're going to transition from proof of work to proof of useful work. As a miner, I do want to make this extremely clear. You have a distinct advantage to mining this particular project now and then stopping before it moves to proof of useful work. Why do I say this? Well, right now, the way mining systems are built out is that you have a motherboard that usually has a bunch of PCI slots on it, and those PCI slots run at a lower bandwidth than they would in a traditional computer. And this decreases the cost for your particular mining rig. In the form of proof of work that you have from AI Power Grid right now, you can basically have a miner that is cheaper that can mine this particular cryptocurrency at a time when you have a higher yield because it's not popular. Once it moves into proof of useful work, the cost will increase for the requirements to mine it. The difficulty will increase as well. And because of the additional workloads, you will be utilizing more power, therefore spending more money for less reward. So in my humble opinion, when you're setting up a project like this, if you don't have proof of useful work ready to go, then you shouldn't release it, because you're going to create a volume disparity within the network. It's actually detrimental to the network, because you're getting less efficient, not more efficient. Why do ASICs, the ASIC FPGA, why does the CPU to GPU to FPGA to ASIC hierarchy work with other cryptocurrencies? Because you are getting more efficiency over the equipment evolution, not less efficiency. So when we talk about a move from proof of work to proof of useful work, you're going from more efficiency to less efficiency, meaning that you are decentivizing miners drastically on your project. So this is basically what I'm telling you is, if you're a GPU miner, your best bet would be to mine this particular shitcoin, grab a bunch of it up, have a volume disparity and be able to control that, and then sit back and wait for the proof of useful work and dump your cards off of it before that happens. That's what's going to happen to a majority of these projects, right? And the other problem that we have here is that there will always be a hunt on these particular proof of useful work projects to bypass the useful work portion. This has been an issue on the Dynex side of things for quite some time. And so live developing something like this that you haven't put the work into before releasing it with a promise of releasing it in the future, in my humble opinion, is extremely dangerous, okay? Because you are then live working on something that's going to create bugs, which is then obviously going to create holes, and individuals will take advantage of those holes for monetary gain. That's just the way the world works. But what are we looking at as far as, you know, what is trending moving on down the line? Well, proof of useful work clearly being one of them. Second to that, which I think is extremely interesting, is going to be AI. And why do I think it's interesting? Not because AI is real, like not because it's being utilized by retail, not because it's super popular and everybody's doing it and everybody knows how to utilize it, but the fact is that it is just a trigger term to sell something, when in fact, if we look at most AI projects that are being, or decentralized AI projects that are available now, none of them are actually computing AI for the most part. People that are computing AI are on the private level, and that's been throughout the mining scene as well. Anybody that's converted to AI rendering from the GPU mining side of things has basically moved into private entity work, meaning that they rent out their systems to private individuals, private companies, and they don't leverage your third-party type tools. So a couple examples here would be like Chlor.ai and Vast.ai. And if you put your rigs on there and pay attention to what people are doing over the past year, a majority of the work has been actually just mining other cryptocurrencies, not actually performing any AI tasks. So while AI is a trend that you will see in names, in practice, when these things are launched and utilized, they won't be utilized a majority by AI, at least for now, because AI is, one, more profitable for GPU miners to do on the private side of things, and two, just like obviously not being utilized in the general market, the regular retail market. It's not like a VPS industry where you have developers that are spinning up, you know, single core, 2-core nodes with maybe 4 to 8 gigs of RAM to run some Ubuntu code. That's not how it is working, right? Or some bash script, right? I mean, or run a test website. That's where like a lot of the virtual private server stuff came along, and obviously Flux capitalized on that early on. So this is really, I think the name in and of itself will be trendy, but the actual use of it will not be what we say it is. And get some water there. So this is like basically the AI power grid from what I can tell, at the very base of it, is going to be what we see coming out over and over and over again. Now, you obviously, if we wanted to go over this individual white paper, we could look at their specific transition to proof of useful work, how they're going to do it. Obviously, they're going to want to add in AI tools, etc. And we'll have to see what that looks like. If you look at like something like Vast.ai, basically you're going to have some sort of Docker enabled pull, and you can pull whatever Docker image you want, whether that be a CUDA version with Stable Diffusion pre-installed. It'll spin up that Docker, pass through on the host machine, and then you'll be able to do that work. Chlor.ai is a great example if you want to get in there. I've been messing with that marketplace a lot. You can do a lot over there. I do think that Chlor is a little bit more, has been moving towards encouraging mining rentals over. What is really interesting, just my humble opinion, is that what Chlor did in particular with their marketplace is make mining rentals more accessible and more customizable than the current offerings like NiceHash or mining rig rentals. Because with the Docker pull system, you can spin up however you want, including like complete Docker images of HiveOS, hop in there and mine whatever you want, modify it to mine whatever you want, and you have access to the full tools, right? Whereas, you know, if you go on to NiceHash, it's like, oh, I'm going to rent this, just this algorithm, and I'm going to point it. So it's a little different. I think, once again, the things, it's like a mask, right? We're going to put AI in the name. But the reality of it is we are being innovative here, but we're being innovative in a space that was already here. We're just naming it something else to make it sound like it's fresh and new. This is all going to happen, I think, with the like on the other side of things with proof of stake and all that. I think that's going to happen again in the NFT space, in the DeFi space. All of it's going to just get recycled and repurposed, right? Like you look at like DeFi projects that are popping off right now. Cybria, for example, CYBA, that one in particular, what is it doing? It's touting like the key terms of AI, right? That's what it does. Is it actually going to have any relevance towards AI? No. Are the individuals purchasing it? Do they know anything or what they're looking for to see if the project is actually moving in that direction? A vast majority of them don't. So, you know, I think when we talk about like, here's what I think, right? In general, is that you have a lot of talking points that projects are going to use to skyrocket, and having the knowledge of what those talking points are will give you an advantage in the market to capitalize off of retail consumers just purchasing stuff that they know nothing about. Pretty much the way that rolls down. It's like a construction worker buying Microsoft stock versus Apple stock. Okay, so there's apparently been going on of a lot of issues on MEXC. And in particular, I think that this is just going to be put here as a forewarning once again to not hold your cryptocurrency within a centralized exchange. We'll key that term once again, not your keys, not your crypto. Make sure you're keeping your crypto, you know, off of centralized exchanges, etc. There have been reports now of a lot of issues with, you know, basically MEXC holding cryptocurrency from individuals. And on top of that, we also had a kerfuffle of the MEXC CEO Twitter account being deleted. CR1337, so CR Leet over here, said the number of people getting problems with MEXC official in the last few weeks is huge. They also froze the account from a friend of mine. He deposited Bitcoin worth low six figures in USD, bought XMR, and tried to withdraw. The first withdrawal went out. However, after the second, they blocked the withdrawal function. It's a disgusting tactic. Number one, luring people who care about their privacy with the fact that there is no mandatory KYC and a generous 30 Bitcoin per 24-hour withdrawal limit. 2, wait for the big deposit, freeze the account, and demand KYC without giving any reason. 3, hope that the customer doesn't do KYC and other stuff they could want, like giving proof of funds. And 4, if successful, just keeping the funds. And so this is a problem that is kind of funny, because what it is you have a centralized system that is touting non-KYC that then requests KYC. That's the idea. In an idea or in an attempt to basically in an attempt to steal the funds from someone who might be doing something illegal, right? That's basically what you're doing. Or someone that just wants to protect their privacy. It's pretty insane. MEXC has had pretty crazy practices over the past 2-3 years. Obviously, things that we've seen in their futures, right? In their futures trading and all of that. It's been a pretty contentious exchange across the board. I haven't had any trouble with withdrawals. However, I'm not withdrawing, that level, like 6 figures in XMR. I've never tried that. I don't think I ever would. I would personally, I don't think I would ever send 6 figures to a cryptocurrency exchange. I don't know. That's just me. I can't think of a reason why I would need to. Any hefty purchase, I feel like people would accept Bitcoin for, but I don't know. Just a reminder once again to protect your funds and not keep a large amount on an exchange. Let's talk about a new GPU release that's coming out. The Asus RTX 4070 Super has been leaked, and it features a 16-pin power connector. Asus is gearing up for the release of the dual OC model based on NVIDIA's upcoming 4070 Super series. A leaked image of the new card has surfaced on the X platform courtesy of Momo US. The RTX 4070 Super is poised to be the most intriguing super card slated for the launch next month. Equipped with the AD104 350 GPU boasting 7,168 CUDA cores, the card has now been officially confirmed to sport 12 gigabytes of memory, which sounds good, obviously, maintaining the exact configuration of its predecessor. But obviously, like we've talked about with the RTX 4070, is the small bus width. And I like big buses, and I cannot lie. And this is something that NVIDIA started doing quite some time ago, but really has started squeezing that bus width on the 40 series, where at 3070 we could get a 256-bit bus, and we can get, from our perspective, pretty good hash rates. The compensation here is supposed to be between, essentially the speed of the memory compensating for the smaller bus widths, which does in practice actually turn into same hash rates on a lot of these algorithms that are memory intensive, like ETHash or AutoLikos or whatever it may be. However, it comes at a a power disparity, because you end up using, in a lot of cases, more power on that memory side, less power on the GPU core side here more frequently. But I wish we would have seen a large bus width with the higher memory speed in general, because we didn't get huge improvements in the mining space from the 30 series to the 40 series, and the 4070 Super doesn't seem to be resolving this. All right, sorry, had to drink some water. So 4070 Super, we are looking at, from a memory intensive mining perspective side of things, no improvement. However, on the core side of things, for mining things like Pyrin, whatever, it may be an enticing option, because we are getting more CUDA cores, and potentially, obviously, I think along with that, we get a higher core clock, which means that you have that option. Obviously, the 4070 Ti, I believe, and all that stuff on a lot of these core intensive algorithms have been good. Let's go look real quick, just to give you an idea. If we did, I don't know, we'll do Pyrin because it's easy. We'll hit the benchmarks. Right, 4070 Ti, Reason it being over the 4070 is it has a higher core clock. So there you go. Pretty much the same as the 4090 though. So 40 series does really good when we're talking about core intensive algorithms. But then if you look at, you know, anything that is not, we could do ergo and hit that benchmark. Well, it says the 4070 Ti is, I need to go retest that. No way. When I have a 4070 Ti. What is this saying it got? No, I did not get anywhere close to 77 watts. Did you guys get 77 watts? No way. I didn't get anywhere close to 77 watts on the 4070 Ti. I got like 130, like you normally get. Anyways, I guess I'm going to go review that and see what I'm doing wrong. I'll definitely have to check that out. But usually, yeah, the 40 series has been basically the same as the 30 series as far as efficiency if you continue to go down that route. But there you go. The reason we talked about the trends in AIPG this go around is because AIPG has been hitting the top of hashrate.no. So I thought it was a good time to discuss that, especially moving into the new year, the expectations on Bitcoin, all that sort of stuff. We do have miner releases that did happen this past week. SRB miner multi 2.4.4, which added Pyron hash as to be expected on AMD and Intel GPUs. They added, you know, Blake 3 Decred for GPU mining on all GPUs. They added support for dual mining, Ergo and Pyron on all GPUs. And they added, or actually, sorry, for AMD and Intel GPUs. I think that's because they already had the NVIDIA side of things. They added the Ergo Blake 3 dual for all GPUs. ET hash and Blake 3, ET hash Blake 3, all those were Ethereum, now Hypera, obvious support there across the board. Just adding more support that we've seen in other miners that has already been released, you know, like I think we've had, where is it? Yeah, anyways, we've had ET hash B3 and Blake 3 Decred support from BZ miner for quite some time now. So it's just a competitive thing between SRB and BZ miner in that particular case. 1.0 miner, version 1.2.8, miner hash rate efficiency improvements on Dynex, which needs to be tested, I suppose. Fix an issue with Zilliqa that could result in duplicate shares. Overall improvements on stability of Dynex, which is definitely a welcoming changelog entry. Hopefully that is accurate. And some minor bug fixes. It says, make sure to check the NR2 argument, especially for 30 series and 40 series. If you have manually set NT, it might be better to remove it and let the miner find the best value. On some GPUs like the 4090, you might get more hash rate without losing efficiency by increasing the memory clock. There you go. Let's go ahead and get into questions and answers for the day. Remember, super chats are never required, always appreciated first to be answered. Tagging at Son of a Tech will highlight the message orange, making it easier for me to read. Hereby service says time to upgrade, get off the 1060s. What's wrong with my 1060 spec mines? They made me more money than anything else. You must be tripping, bro. 1060s are the best spec mine. Easy. 1063 gig, baby. All right. Let's see. Sub says, that's Son of a Tech. What should I GPU mine? You should GPU mine what's most profitable and convert to something you prefer. Are you mining AIPG? No, I am mining what's most profitable. Son of a Rabid Panda says, at Summertech, Merry Christmas. I bought an RX 6090 XT in 2021 for 1500 USD. Should I now buy a 7090 XT for 800 USD to DCA on silicon prices, or wait for the 8090 to DCA on it? There are, if you are specifically purchasing for mining, there are better deals, I think, that you can purchase for mining than, say, a 7090 or I think you mean 7900 XT. Yeah, 79. Other than a 7900 XT or a 4090, I think that there are better deals out there. And by and large, for example, like we've seen, like I was just talking about, the 30 series isn't really that far behind the 40 series. And so paying a premium on those prices doesn't make a lot of sense. I mean, the GPUs from the retail side of things that I was buying were the Intels, just because of the amount of memory bandwidth that is available to it. But now recently I found a lot of options that are just like, people are starting to drop out and you can find a lot of good prices. Obviously I was buying the S1995Ts as well. Stocking up on those. You know, people will be like, why don't you buy the S21s? Or, well, there's power issues with those. Or let's say the S19K Pro or whatever. And it's because why would I spend more money on something that is new but not that much better when I have the option of buying something and putting in just a minimal amount of work to bring up its efficiency? It doesn't make sense. I mean, I buy a 4090 to play video games and record videos on, you know, but I don't, I don't think I would throw, I also didn't like my 3090 rigs that much. 3090s, like a majority of them, have fan issues. They all run hot. I'd much rather just have like two 3070s than a 3090. That's how I feel about it. And you can get 3070s cheaper now, so. Al Mossy says, ask Tech, do you think Bitcoin ASICs will be cheaper after the halving? I mean, that's what Bitmain was planning on with the announcement of the S21, right? They were planning on us to see a reduction of the price of Bitcoin, but in the back channels, I've heard, you know, through the grapevine that Bitmain feels like on a executive level that they made a mistake announcing the S21 too early. They were planning on what we were talking about at the beginning of the show today, where they were planning on, you know, Bitcoin to retrace again before the halving, and then the halving to put more pressures on miners. So they were setting a good price point for the S21s that make it enticing given those current circumstances. And then they are now regretting that, which means that, like I said, history doesn't always repeat itself, but it always rhymes. I think they might have missed the rhyme a little bit, and they feel like they would have had more revenue potential had they not announced that too early. Sub says, have you considered creating your own crypto? I've created tokens. I've created parachains. You know, I've forked them. I'm not a developer to the point of being able to build one from the ground up. And I don't think that there's really any relevancy to forking cryptocurrencies for the most part. The only one I would have considered would have been like forking Caspa and making it, you know, ASIC resistant, but other people are going to handle that. I'm not like a great coder or anything. Anonymous Miner says, that's something I just got some 3070s. I was wondering if you had good overclocks for Kapow for Bitcoin stacking from altcoins. Let's see. I mean, I don't know what you're asking necessarily when you add the Bitcoin side, but for overclocks, like now with hashrate.no, like don't even like you don't even need to ask me. Just go to hashrate.no and pull it up and press the copy button and paste it into the LOL extra configs. It's like it's so simple these days. You just grab it and go. Lahib says, that's how I think I'm buying 3070 in a 3900X whenever I find them on local markets for Facebook Marketplace. Yeah, I mean, like a lot of 3070s were hitting for a little while pretty cheap, but you had to buy them through those kind of platforms, right? Kielbasa says, that's some attack. Some cards want to stay locked at 810 mem. NV Tool default works, but after a reboot, they lock at 810 again. I don't know why they're locking. Have you put it in a completely different system? That's what I would do. And a lot of the 3070s have dual BIOS switches too. You could check that and swap it over if it doesn't work putting in a new system. But logic would dictate, take it out of the system I have it in and put it in another system to double check. Shiny says, that son of a tech. Remember when I bought two 3070s for the price of a 4070 and you told me it was dumb? I do not remember that. I don't think that the 3070s is cheap enough. I still think 30 series should be cheaper. Aren't we still, like, if you can do Facebook Marketplace, you can find them, but I think like on the retail market, they're still too expensive. Scale says, thank you for all the hard work. Remember to take a break and enjoy life. I did this weekend. I took like 3 days off. It was amazing. Also, I don't have a day job for a week, so we'll be working. I got to get some mining rigs up. Merry Christmas. Yes, sir. We'll keep moving forward. I'm going to call it for today. Get back to the family. The house is a wreck. It looks like it looks like Toy Story happened. You know what I mean? Toy Story happened in the whole house. So we got to go get these toys under control. I will be making a guide on locals tonight. That should be coming out. Posting a guide over on locals at sonofatech.locals.com for an unmentioned project. And then we will be doing I'll be getting these new PS5 miners up. So I got to flash a bunch of NVMe drives. I'll see you guys next Tuesday. Don't forget, become a supporter over at sonofatech.locals.com and purchase the crypto mining Ecourse at sonofatech.com. I'll see you next Tuesday.